Welcome back, everybody, to the Investors Roundtable. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K Kraft. That's BOBBYKKRAFT. And we have a very special Thanksgiving episode. This is our turkey talk. This is our chance to finally get everyone's secret family recipe on how they cook their turkey and make their stuffing, and maybe how they a little turkey trade. That we might be getting that a little bit. But with that, I'd like to introduce our panelists for today. Our mainstay on the panel, the anchor of our the Investors Roundtable, Stephen Kiel from Arquitos Capital, who's coming in looking a little Neo-esque today. So what's up, Stephen? How's it going,
Yeah,
man?
no, I'm starting the Thanksgiving weekend a day early here, so good to be here, Bobby.
Very good. He might be joining the CIA with this look. I don't know. He's undercover in New York.
I can't say anything further.
Exactly. And then I'd like to also welcome new to the panel, but we actually just published our own individual episode on the Planet MicroCap podcast, and I'm really excited for him to join us today. We got Shree Viswanathan from SNN Capital. Shree, always a pleasure. Thank you for joining us today.
Delighted to be here. Thank you.
Thank you. And joining us back, it's been a few weeks, and he especially requested to be on this episode because he has a lot to be thankful for this year. We got Christian Ryther from Curreen Capital. What's up, Christian?
It's great to be here. Thank you, Bobby.
It's great to have you. All right, so as we said, this is our episode talking about what we're thankful and grateful for as investors. Look, this has been, as I said yesterday on my own pod, this has been a very difficult year, and that's putting it super lightly. And a lot of people have experienced a lot of heartache and just so much. It's just a heavy year, But I think the fact that we can call the investing universe and being in this ecosystem, it's a privilege, and I'm really thankful to call it, to just be a part of this community. Okay, now I'm getting started here with that, but I figured we would hear from all of our panelists as to what they're thankful for this year. So starting off, Stephen, Neo, CIA agent, what are you thankful and grateful for this year as an investor?
Well, first of all, thank you, Bobby. I'm grateful for you starting this roundtable. It's been a lot of fun over the last few months. It's been fun to participate. I think I've met a lot of great people and strengthened relationships with a lot of great people here. And I think been able to get some nice, interesting thoughts out and get the message out. I've gotten great feedback over the last few months from you doing this. So thank you very much for starting the idea. And for those of you who don't follow Bobby on LinkedIn, I think you should. He just posted some numbers from his podcast network a day or two ago. Just outstanding numbers. And so congratulations to you for all the hard work you put in.
Thanks, man. That, by the way, this was completely unsolicited. But when I said we're going to do a Thanksgiving episode, it was not so that Stephen could pat me on the back.
I thought we were all supposed to.
But I'll take it. But I'll take it. Let's keep this train going. I like where we're going. But yeah, no, Stephen. On that note, I also like to thank every one of our panelists. You've been on I think all but 3 of these episodes or something like that. So, thank you again for joining and everybody for joining on every single panel. I like to think we get deep. We get deep sometimes, we like to have some fun, mostly fun, but we get deep. And, I really hope everybody listening always gets a lot out of these episodes and has a good time and feels like they're in the room with us. That's really what we want out of this. So, So continuing on, with our thankfulness and gratefulness this year, Shree, what are you thankful and grateful for this year as an investor?
Sure. No, delighted to be on this podcast. Thanks a lot for having me. Greatly appreciate this. I'm actually thankful for tofu because of all these panelists here. I'm the only vegetarian, I think.
I dabbled for like a week.
Tofu.
Okay. All right. Yeah. But no, seriously, I think, as you mentioned, Bobby, this has been a tough year for a lot of people from a variety of different angles, and for us investors, of course. But I'm actually thankful for what we have gone through from an investing standpoint, because my evolution as an investor started, about a year and a half or so ago, a couple of years ago, soon after I actually launched SVN Capital. What I mean by that is I was trained in the traditional sense of cheap value stocks, and you know through a variety of different angles as interest rates started plummeting, started asking a lot of questions about introspecting about my own approach to investing. And it only got accelerated as we sort of plunged into the depths of this pandemic in February, March. So, my investing style, as you all probably know, is more quality oriented, but it didn't happen that way to get off this path. And I had to go through a really tough patch. And so in a weird way, I'm sort of thankful to what we've gone through. I'm sure there are other things that we'll come back to, but that's the first thing I would start off.
Very good, Shree. And Christian, let's go to your take.
I agree completely with Shree. Like that's what I was thinking when I wanted to come on this, is that it's like one of these character building experiences that you don't want to wish on anybody, but you're like, I'm glad that happened. I wasn't happy with our performance maybe starting 3 years ago through, let's say, middle of this year. And I think this year, especially, just like pummeling me, it opened me up to be willing to, I don't know, reevaluate my investing process, be more open to new ideas. Like I'm fairly disciplined, and I think that has prevented me from trying new stuff, because I'm like, this is what I do, this works. And then it required for it not to work and for me to be like severely banged on the head by performance and like my own frustrations, to be willing to, I don't know, reevaluate and be more open to exploring new stuff. And it's not like I want to become like a super growth investor, like right at the tail end of growth's supreme outperformance of value. But I do want to be able to evolve and grow and get better. And I think that, I don't know, pain allows me to do that. And I'm thankful for the pain of the past, I don't know, 3 years and the climax of it in early 2020.
Absolutely, Christian. Coming right back to what would you say were some of the things that when you dove deep and you experienced the pain, what were some of the things that you're like, all right, these are some of the things that need to change? I know some things might be proprietary, but whatever you're open to sharing.
Well, I think I'd say March, April, May, I was like, what is going on? I think I know what I'm doing, and the engine is not pushing a wheel. Like I think I know what I'm like. Something is wrong, and that was like the beginning was frustration of not knowing what was broken, but knowing that something wasn't working right, and then that was what led to like looking for stuff that I could do better and like reevaluating myself. So I think like specific stuff, like a lot of it was basic. I'm just like, don't have a view on the market. Don't try to express a view on the market, which I know. Don't water the weeds. Do water the flowers. Just like that Buffett and Peter Lynch saying of like, really look at operating performance, and if it's not going the right way, like I should not be adding money to that stock. Or if the operating performance is going really well and the stock is up, maybe like my impulse should be to add money to that. Like, which is, I don't know, I sort of knew that stuff. It's not like Buffett and Lynch are new to me, but that, I don't know, reevaluating what I had done in the past few years of essentially watering the weeds, I don't know, I just wanted to kick myself over that. And then since then, trying to be more open to new ideas. And I think that leads me more to high quality, long-term, high growth runway type stuff being more attractive, despite the fact that it doesn't fit in my upside downside framework as easily. And then sort of I don't know. My thought now is that my upside downside framework works especially well in a certain subset of the investment universe, but it's not everything. And I'm still working on that. So like, I don't want to go on forever, but those are some of the things that pain forced me to look at. Yeah.
So you're saying that next Thanksgiving, when Beyond Burger comes out with a Beyond Turkey, you are going to invest in the company?
No. I mean, I still have to
not.
understand
Okay.
these businesses and stuff like that. But like, given the choice between a great business that can grow at 4% a year in perpetuity and a great business that can grow at like 15% a year for, I don't know, 15, 20 years, my gut would be to go with the cheap one that's 4% in the past, because I could put it in a box that was very easy. Now I'm trying to push myself to be like, you know what, like in 10 years, where do you really want to be? Like, do I want to keep churning these little things, which requires the market to allow me to churn them? Or do I want to own something that I can own for a long time? How to offset those, I still don't know how to do that, but like, that's where I'm pushing myself.
Well, that's what's so fun, I think, about investing is you know, it is a process where you're not only constantly learning, but also evolving in a way that's interesting, right? Because you're reacting, we are reacting really to the circumstances put before us. We don't control Fed policy. We don't control Treasury policy. We can't control, certain things that happen in various industries, and we have to humble ourselves to that, only to be able to react to it and assess it properly and use our judgment to make sure that that the reality matches our perception. That's what I think it is. It's ultimately a psychological exercise as opposed to kind of a money-making exercise, if you look at it in this way, which I do. So, it is a little bit of a joke when you look at some of these companies that are trading at really unprofitable, but trading at such multiples of revenue, Beyond Burger, Turkey, whatever, one of them. But, look, over the last 10 or 15, 20 years, the investing kind of universe, the reinvestment opportunities in some of these companies, I'm not saying Beyond Burger by any means in this case, but for some of these companies that just don't show a profit, because there is such a great internal reinvestment opportunity, that's something that's different. It's different than, the 1950s when you could assess, you put out a certain amount of money for a railroad line or something like that. And then you knew what the runway was, the cash flow runway for the next 50 years, 70 years. That doesn't happen today. And it's interesting and it's different, and it causes all of us to evolve, whether you want to call yourself a value investor or something else. I remember 9 or 10 years ago talking to Josh Tarasoff. He's talking about Amazon, and all of the value investors were like, "You're nuts. It's not a value investment. It doesn't show any profit." And I think most value investors today would categorize it into that bucket, into a value investing bucket. So things evolve, definitions evolve, and that's what's so interesting, I think, for all of us, and why it can be a lifelong endeavor.
Christian, I know we didn't meet until this morning, but it feels like your evolution and my evolution met somewhere out there. That's exactly how I have also sort of transitioned, to sort of say what you said in a slightly different manner. For me, at least, I was trained in the traditional sense of go find cheap stocks, focus on valuation, and then try and understand what the business model is. As I evolved, I sort of went with the same two objectives, but flipped the order. Flip the order by saying, first of all, figure out if it's a good quality business, and also accept the fact that the true quality businesses, quality from a variety of angles, capital needs, return generation, management team, competitive strength, everything. So you put all that into that bucket. You have to acknowledge the fact that those types of businesses typically will not sell at the same low PE or a low EV to EBITDA multiple unless we go into a February, March kind of a meltdown. So accepting that, I sort of have flipped the order by saying, okay, go find the good quality business first, and then see if I can actually pick it up at a reasonable valuation, not necessarily the traditional old way of cheap. So I feel like, at least from what I heard from you this morning, our intentions and the evolution sort of met out there somewhere.
See,
It's like, I would say that, I don't know, when I look at Peter Lynch and he talks about fast growers, because that's how he terms these great quality stuff, they seem to be a different animal. Like, I think that you can have a business that's so good, with such a competitive moat and such good management, and such a great growth runway at high returns on capital, that it's hard to say what it's worth. And I want to be able to think about those in an intelligent way and maybe put some money towards them when it's not stupid. And I don't want to just poo-poo them because they don't fit in my normal bucket that works so well for turnarounds, for cyclicals, for sort of stalwart, slower growing, very good businesses. Yeah, and it, as Stephen said, it's sort of, Amazon is like one of these, that's like the freight train that crushes all the value investors' mental model. Because it's like,
Tesla's the one that really crushes everyone's brain, but Amazon was the first one.
Yeah.
But
and for
Amazon's
me,
a real
like,
company.
I have to like try to put my head into the growth investor's mindset of like, try to look at these businesses without my preconceived notions and be like, what is this thing? Do I like it? And like, I think when I actually do that, I'm like, wow, this is actually, like, sometimes some of these are trash and some of them are going to be discovered to be like, they're going to fall from the sky as nothing. Because we probably are in, I mean, growth is extremely popular. All of us are talking about it, for God's sakes. But some of them you look at and you're like, oh, yeah, I would love to own this. And if I did own it, like, you would have to pry it out of my cold, dead hands. Like, I would never sell it, but like, or it would take something crazy for me to trade that for, like, it would have to be like 10 cents on the dollar for me to buy like some other cheap business. Yeah, and like, I still want to be able to do my cheap, very good business. Yeah, but the great business, yeah, I don't know. Including that, yeah, I'm going off the rails here, but
I feel like I'm going on your journey with you just now. You know, like this side of the brain, and then like that side of the brain. Like, for those who are just listening in, you know, Christian was going back and forth on the screen. It was great, good stuff.
I'm not done with this journey, obviously, but that's where I am. I'm glad for the opportunity to be on this journey this year.
That's right.
Yeah, and it all goes to, you know, okay, what is a great business, right? You know, in retrospect, obviously, Amazon, look, we thought it was a great business at the time. We know it is now, but there are other businesses that are not so clear cut in that way, and I think that's where the challenge comes in, and we all struggle with it, not just in the way that Christian was expressing. We all do, because you say, okay, well, I'm willing to pay up for a great business. Okay, MasterCard, when it went public in '96, you knew it was a great business coming in. Wouldn't you have participated in the IPO? You know, it's up whatever 30% a year for the last 20 plus years. Great. But you know, the reason why you can say Amazon, MasterCard, and others, there's like 4 or 5 of these companies, is because they're such outliers. And you're not presented with these opportunities very often. And also, what are you willing to pay? You know, it's a great business, 70 times cash flow. You know, are you going to invest in Stripe when it becomes public at $100 billion valuation, even though it's a great business? Are you going to invest in Snowflake, where it's very difficult to judge? Sounds like a great business, very difficult to judge its valuation. And, you know, of course, Amazon, for whatever, it took 12 years to get back to its original price from the late 90s, right? So even though we can make these types of statements and say we're going in this direction, and I think we would all agree, yeah, we want to we would invest in those great businesses given the opportunity. But what's the opportunity? 20 times, 50 times, 100 times? and
Well, you know,
that's where you get pause when you're actually presented with it at that price and valuation.
I'm really glad we're going down this rabbit hole, because yesterday when I was doing my typical trolling on the Value After Hours podcast, you know, I asked, I love those guys, so it was, you know, but you know, I do a little trolling, but I just listen in every week, and I asked the question. I was like, you know, because we talk about, you know, Tesla and Apple and, you know, all these great businesses, you know, and the question that I had that I never really asked was like, you know, when do you bet against the innovators? You know, it's so clear that, you know, the Steve Jobs is who he is. It's so clear that, hey, whatever your thoughts on Elon Musk, hey, the guy is a game changer. Okay. Whatever your thoughts on these innovators, at the end of the day, they are innovators. You know, at what point are you like, I can't go on this road with you, buddy, you know, or, you know, what, how do you guys think about that?
I'll start. I mean, you don't have to bet against them. I mean, like, you don't have to kiss all the girls, is the Peter Lynch phrase, which is, I guess, misogynistic now. You can't say that. I shouldn't have said it. But like, I don't know. I own 7, 8 stocks or something like this. Like, I say no to lots of amazing businesses and lots of amazing management teams, and that's cool. Like, not everybody's going to like me either. That's fine. So I don't think not owning the stock is not betting against them. But it's like, I'm cheering for you from the sidelines. Like, that's okay. And I wouldn't, I mean, I'm not shorting these things. That's a whole different strategy. But yeah, I don't know. I'll let other people talk about when you go with the innovator or other thoughts on that.
Right. Shree?
Yeah, for me, you know, I absolutely believe that this capital deployment is by far the most important aspect of, you know, management's responsibilities. And I generally find these owner operators to be much better than hired hands. And so in my portfolio, 10 of the 12 businesses are owner operated or family controlled. Of course, it can get completely out of hand if, say, the family or the owner sort of controls it through multiple share classes. You know, we saw that with these print businesses back in the 60s and 70s because they wanted to have editorial control. And that somehow has transitioned into the technology space. And so you have, I don't know, 1,500 classes of stocks in so many different, you know, technology businesses. So, you know, that's a negative. That sort of, you know, puts a, you know, obstacle in terms of how I think about opportunity set. But as Christian said, you know, yeah, we don't have to necessarily accept owner operators for who they are in every situation. You just need to be careful, appreciate the quality of the business, appreciate the quality of the management team. And that sort of leads to what you know, Steve mentioned earlier on, you know, Snowflake or a few other newer businesses. What do you you know, how do you understand the valuation of it? You have to really squint your eyes and look far into the future to see any sort of profitability or cash flow. And so for me, consistency of business over a long stretch of time gives me the confidence to sort of at least have an idea of what the business might be 5-10 years down the road. So, you know, I've always said this. You know, Winston Churchill, he said, the farther back you look, the farther forward you will be able to see. So, and I sort of look back at least 10 years to get that confidence and, you know, look forward. And, you know, I generally don't get the confidence in some of these newer technology plays. And that's why I'm not invested in companies like Carvana, Fastly, MongoDB. You know, I keep looking at them and scratch my head as to what's going to happen to these businesses, but I'm not invested in those for those reasons.
Yeah, and that's why I think you have to be concentrated, because you know there is a whole subset of the investing universe that you're just not going to be able to get that predictability. Things are changing too quickly. There's not those historical numbers. The competition is different. The moats are not as deep as maybe they previously were for certain industries. But on the other hand, look, you want to, if you don't care about the ESG stuff, you want to own Altria. You got a long history and probably some future predictability from it, right? And there are a lot of other companies like that. I mean, I don't own Altria, but look, heck of an investment for the last 50 years. Same thing with the MasterCard and those types of companies. But right, it does preclude you from looking at a whole lot of different industries, a lot of players in historical industries as well, like Shree said with Carvana and other things like that. You just don't have that predictability. It doesn't mean it can't be a great investment. It means that the outcomes are widened, right? So the risk is much higher. The potential for reward might be very high, but also the potential for total capital loss is there as well. That's just simply not there for some of these long-term, these businesses that have been around for a long time that are more traditional in nature.
Absolutely. Christian?
I think that like my general framework has been for valuation has been to use an upside and a downside. So like I've got my reasonable value, I've got my downside value, and like I want to buy the stock like where I have a good upside to downside ratio. And I've like what I've been feeling this year is that framework and that ability to get a good upside to downside value does not function when I'm dealing with these fast growing companies with dynamic CEOs who just pull rabbits out of hats. Like my upside to downside framework works extremely well with more predictable businesses like Altria or something like that. And like I can run that machine all day long, but if I try to apply that, it's like a hammer going through water or something like that with a fast grower. It's just not a tool that is useful universally. So it's like I've got this great tool and it turns out I can only use it like in New York State and I can't use it in the rest of the country or whatever. Like there are places that I can't go with it. And I don't know, I've got a crazy hypothesis that it might not even be possible to use what I think of as valuation when I'm dealing with truly outstanding businesses with truly outstanding management teams. I don't know what to do with that idea or that thought, but it's just like, what if our great tools as value investors are not universal tools? They're just like tools for a subset of the investing universe. And maybe there are no tools, or I don't know, VCs who are actually good might know what the real tools are for growth stuff. But yeah, like I said, I'm going all sorts of crazy places this year with my mind because I've been so broken.
Well, I don't think it's a terrible idea to take a small piece of the portfolio and, be disciplined about it, take a certain small percentage of the portfolio and just put it in a couple of these companies, forget about valuation and be willing, but you also need to be willing to own them indefinitely, right? So I've done this with, I took 1% of the portfolio, I put it in C Limited. Our friend Fred Liu put 10% and he's rich now. He's had a heck of a year because of it the last couple of years and good for him. But, for us, if it doesn't match some of our framework, look, can you put 1% in there? I follow it fairly closely, right? But I'm not going to make it probably not going to make it a larger position unless something changes in terms of the predictability of the business. But it's there and it has a runway. It has a 30-year runway. And some of these companies do have 30-year runways. You just don't know where it's going to be in 2 years, 5 years, 10 years. But 30 years from now, if things go in their favor, it could be dynamic. We're talking 30, 40% growers per year. Also, it could get displaced in 5 years, right? But if you have a small basket of these things, a small piece of your portfolio, look, if you would have bought MasterCard in 1996 with 1% of your portfolio, you'd have a tremendous track record today and just never have sold it. Probably would we can run an analysis or regression analysis or something based off this, but it would be a large piece of your portfolio today if you never sold it.
Yeah, Bobby, bringing it back to the title of this podcast, what are we thankful for? The one other thing I wanted to mention is I'm certainly thankful for the ability to kind of talk to individuals one-on-one. I mean, this can be a lonely exercise, but at the same time, it's been very liberating, coming from a few different platforms where I used to work in teams. And that sort of communication is how I actually stumbled into Stephen Kiel and Willow Oak. I had a conversation with my friend Keith Smith middle of last year, and he explained a little bit of what he had been through and put me in touch with Willow Oak and Steve's COO Jessica, and had a great conversation. That's how I ended up partnering up, and to sort of have have somebody to throw ideas at and get some feedback. I have conversations with individuals on a regular basis, and one that I do almost on a daily basis is Chris Mayer, the guy who wrote 100 Baggers. What I find is, people like that who can actually write well, have the clarity of thought. And that is what I'm looking for. I'm not looking for analysis. That I can do. I'm looking for clarity of thought and be able to sort of filter out my own biases. And so that I'm really, really thankful for. And on that score, I mean, to all three of you, I would highly encourage you to sort of reach out, and I'll do the same in the future as time permits and as needs arise. So that's something that I'm thankful for.
Absolutely. Well, I already know that, if that's what Shree's thankful for, I feel like Shree is going to be on every, Stephen, he's going to be the new anchor on every single episode from now. But I'm going to tell you right now, my first holiday gift to Shree, I'm getting him a microphone. All right. We're getting this sorted out, like toot sweet. All right. But yeah, I think that might be my holiday gift to everybody that we've had on. I've interviewed this year. I mean, most everybody has good stuff. But, I'm going to be getting the microphones for everyone. But
that does go, and I appreciate that, Bobby and Shree. Great comments, and I totally agree with you, and I know Christian does too. That sense of community is so important because it could be a solitary endeavor here. If you work for a large firm and it's a team atmosphere, that's one thing, but that's not what we do. We're kind of small investment committees, investment committees of one in many cases. We're making the ultimate decisions on the portfolio. We're taking more of a Buffett or a Munger or a Peter Lynch approach or something like that. And so, there's a lot of times where you're sitting there deep in the filings, or you're having phone conversations or sometimes meetings with management back when normal times were happening. But you need to kind of keep your sanity in perspective by talking to peers. And that's where this happens. I've had that for a long time, not only with Shree and Christian. Christian and I have talked through the years as well, and Scott Miller's network, Keith Smith, Dave Waters, Focus Compounding, who we're partnered with as well. And my friends Jeremy Deal, Thomas Brazil, all these. I mean, I could go on and on like a Grammy speech or something like that. But they've really brought a lot of value to my life and made me a better investor. And when you have people who have different backgrounds from industries or different experiences, and you trust them, so you have these horizontal relationships where you're peers and you trust their feedback. Doesn't mean you have to agree with it, but you trust them. And it's really helpful when looking at a new company, or when analyzing a situation, or when getting into a new industry. And so, I'm to second what Shree said, absolutely thankful for that. And it's something, I would encourage everyone who's kind of getting new into the industry, or maybe if they're an individual investor, but they really enjoy doing this, to cultivate those relationships.
That's one of the things that I've been doing more of this year. I think that I prided myself on being a guy in a room doing it all myself. And like this year I've been reaching out and like working on companies alongside other people. Like I'm like, hey, I'm looking at this, and other people are like, oh, that's cool. and then they come up with all these questions and they get answered those questions. And I'm like, I wouldn't even have asked that. And I'm so glad that you did. And I'm glad that I'm doing it now. Like, obviously the best time to plant this tree would have been 20 years ago, but I'm glad that I'm at least doing it in 2020. So again, the disruption and the pain has been helpful for me to do these things that I knew that I should have, but like, I'm finally eating my vegetables in 2020. So yeah, I'm very happy about that.
Hey, they're not vegetables. This is good. Not, certain vegetables are good too, but it's not painful to talk to people, Christian. Come on.
I mean, I'm pretty introverted, so no, but it's great. I like it.
We can email. It's fine.
Listen, Steven, not everybody can be on every single episode of the Roundtable, okay? Not everyone's as extroverted as you, despite the black hat situation going on right here.
Undercover this week.
But I think Christian hit on and Shree, I mean, all three of you hit on a great point, and it's something that I'm thankful for and I guess maybe this is just running a media company, is the fact that investing is a team sport, and it requires just thoughtful calculation, asking those questions, and really taking what you think to that next level. I think investing is the one place where, like, let's say you had a midlife crisis and you feel like you got to do shrooms. Don't worry, just get into investing. That'll open your mind up to a whole new set of thinking at that point. Don't do shrooms, kids. Anyways, I or if you're of age. I don't know,
now you sound like you're going through an existential crisis. Yeah, do it, don't do it. I don't know. I mean, maybe it's not terrible.
Microdosing is okay.
Do what you want.
Right?
I mean, I'm just here as the host.
Not co-signing anything,
Bobby's got kids.
This is not a solicitation.
Yeah,
this is not a solicitation or a recommendation to do anything. I should add that to my disclosure at the beginning of this episode.
Yeah.
But moving ahead now, we're as everybody here has really talked about, this being a team effort. Going through the pain of 2020 and now the rapid rise back. I mean, this has been such a just absolutely bonkers year. Like I like Christian, I want to get you like a couple journals to make sure that you can write down everything that's going through your mind and going on this year. I mean, so I think a good question maybe to all of you is really managing through that just craziness of what we did this year and how maybe we can take that into, the years going forward. Shree, I'd love to start with you on this.
Yeah, sure. I think it's a very important exercise, right? Just to digress a little bit, on an average, a human being has about 30,000 thoughts a day. And the more interesting aspect is almost 95% of those thoughts are from the previous day, the day before, and the previous week. And so we keep repeating the same thoughts inside our head. And for what we do, at least the way I have sort of positioned my life and the way I work, is by having, at least trying to have a clear mind. A clear mind is what allows me to kind of think, take various different variables into consideration, and I will not be right every time, but at least I'll be able to think clearly. And so there's actually a gentleman by the name of Chris Bailey out of Canada. He has written a couple of fantastic books. One of them is called the project something, I forget the name now, the Productivity Project, yeah. And his point is to be able to think clearly. He meditates on a regular basis. Coming from India, the spiritual capital of the world, I've been exposed to that for a long time. And I used to be somewhat haphazard in that effort. Over the last few years, particularly after I launched SVN Capital, I've made it a point to sort of focus first thing in the morning, spend somewhere between 30 minutes to an hour, just sitting in one place and, draining out all the ideas. And then to your point, Bobby, about having Christian write it down, that's actually an important aspect of how I've also evolved, maintaining a journal of how I'm thinking every single decision, investment decision I make, and not just investment decisions, but the emotional turbulence, being able to sort of look back and reconstruct the thought and the experience from the previous day and the previous week. I think that helps sort of clarify that mind. And so, those are sort of hacks, you may want to call it, that I've sort of incorporated into my life, but it's actually exceptionally helpful. It makes me think clearly and makes time for certain specific, making time for certain specific activities, helps me move in a direction that I eventually want to go. So we'll see. I mean, if we have this same Thanksgiving conversation 5 years from now, I'll tell you how successful or unsuccessful it's been.
Well, at the very least, I have a feeling you'll be very content no matter what, as long as you're meditating every day. So as long as that happens, I think you'll be, no, I'm good, So the portfolio is down 40%. It's fine, but I'm pretty happy.
Let's say up.
Yeah,
because
up,
it's not the highs. You don't want the highs to be too high and the lows to be too low, and control yourself with that. But
right.
I think to Shree's point, I do the same thing, not to the extent I think that Shree does, but that's again what's so interesting about investing is that when you're really looking at it as an intellectual exercise here, it's about self-improvement, right? So it's about clarity of thought. It's about, again, matching the reality to perception, and then realizing situations where that doesn't occur. And you start to kind of, in a non-judgmental way, notice that in other people as well. And, I think the best thing to do, and this is always I'd say for this Thanksgiving, I would push out, the idea to kind of be thankful for yourself, be kind to yourself. It's been a difficult year. There's a lot of decisions you might have made differently if you knew what you know now back then. You got to forgive yourself for that and be thankful for being here, not only for your friends and your family and your situation right now, but also for what each of us have been able to learn and experience, both good and bad, and take that and accept all the circumstances that brought you here.
By the way, I 1,000% co-sign meditate. I'm a big meditator myself. I was writing down, actually, as you were talking, like 2020 goals, like meditate more, try and meditate every day. So I'm a big fan of that as well.
Look, I see like a value investing retreat sponsored by SNN, where we all go. We have a massive meditation session, and then we all come back and have 80% years.
Actually, it's going to be a no talking weekend. You're not allowed to make a peep. That we're just kind of like, oh, you're here.
Well, there's a sensory deprivation thing as well for a week or two. Tim Ferriss has talked about this, but I think there's one here in New York I've looked into, where it's basically a black room. And if you do it after so many days, you start to kind of have these visualizations. Some of your dreams happen while you're awake because of the sensory deprivation, which is another way to kind of ground and center yourself.
There is a method of meditation called Vipassana. It's actually a style of meditation that came out of Burma, Myanmar. It's a Buddhist form of meditation, and there are centers around the country. And in fact, they actually put you through that. The first timers go through a 10-day program that you don't talk at all. The only person you can have a conversation with is the actual teacher, and you don't do that on a daily basis. In fact, the first 3 days, you're just focusing on your breath coming in and out of your nostrils. That's how serious that meditation is. Probably, Bobby, you can find a place where rolling hills meet running water, and we can all sit there and focus on that breath.
Actually, I think that's the name of the place, where rolling hills meet running water. I think I already found. Yeah, there we go. But Christian, your thoughts on this?
I've been writing all this stuff down because I think these are good ideas. The things that I've done this year, I mean, to try to keep this going for myself, I've got a I journal a lot for investing stuff, but I've got a new e-reader thing that I've been writing on a lot more now, and I've been trying to write down like how I invest now, just as a record of that, and because I know that it's going to be changing because I change all the time. So that's one thing. The other thing that I've done this year, like I got my daughter was born this year, so now we have 2 kids, and I feel like that also crushed me in a way that I had to sort of rebuild myself, because like I just don't have time, especially when she was, yeah. And what I've done to try to deal with this shrunken amount of time in my life, that's mine, is I have a score sheet for myself that I use every day of like, I get 2 points if I go running, or if I go biking. I get 2 points if I reach out to somebody. I get 1 point if I don't know, go for a walk. I lose a point for this, and I lose 2 points for that. And I have just like this list, and at the end of the night, I just scrawl my score on my calendar. So it's like a very light form of control over myself. Like nobody sees the calendar except me, but it's still like, do I really want to, like, yes, I do want to go for a walk because it's a point. And like, if I eat chocolate, like that's minus 2 points. So like, do I really want to do it?
I love this.
Doing.
I'm gonna do this. I'm ready. I wrote it down. Scorecard. I freaking love that. You're gonna have to send me your basis for points.
No, I think you can. I don't think the points matter as much as just having them. And like,
what?
Like you can make it 6,000 points. You can make it 1 point. You can make it negative 2,000 points. Like, just have something. I think Ben Franklin did something like this.
I just want to earn points. You know?
Yeah,
it's like,
I mean,
it's like your own personal rewards card.
Yeah. But then I can like add these things. I can like add 3 points for being kind to myself, because I never do that. And like time for meditation or scheduling time for journaling. I think that's really good too.
Give yourself more than 3 points. Come on.
Christian, I freaking love this. I swear I'm gonna do that. I really, that's
like, so I that's what I've been doing this year, to nudge myself away from what I don't like me doing and towards what I do like me doing. And now I want to add some of the stuff that you guys have mentioned to my score sheet. Yeah, so that's
sweet.
me.
Oh, that's awesome, Christian. Seriously, and then I'm also going to give that score sheet to my wife and say, look, if I get 10 points for this week, we get to go here. And then, so just we're going to make this, it becomes a collaborative effort where she's like, you didn't hit your goal for the points.
But then you're
week,
judging her. You're giving her points and taking them away, and then she's doing it to you. And yeah.
See, I didn't even go there. I didn't even go there. I was just like, just for me. Because now it's like, if I get called out, it's like, what can you call me out for? I got 50 points. You told me get to 50, and you had a good week. Now look, I got 50 points. Like, what can you be mad at me for? But we digress. But listen, all right, so we're pretty much there. I'd say, to close out here, let's get some final thoughts. Give me your hottest stock tip for 20. No, I'm just kidding.
Going along the Fed.
Yeah. So your final thoughts here as we close out 2020, going into 2021. What are you most hopeful for? I think that's something that we always say at the dinner table on Thanksgiving, right? Is something that you hope to see, or that you're going to work towards wanting to see in the new year. So Christian is looking like he's thinking right now, so I'm going to come to him last. Steven, I'm going to go to you first.
Sure. Well, look, I think there's a lot of uncertainty in the economy. We don't know. We're hopeful, obviously, about the vaccine and things happening and things getting back to normal here in the next few months. Obviously hopeful to that as well. I'd say my wish, so to speak, would be that the overall economy and the health of the country and the world can match the stock market. And the economy can catch up to what the stock market thinks it can be.
That's good. Shree?
Yeah. So, one thing that I've realized is, there's a lot of chatter about current valuation in the market and how interest rates have played a role in it or not playing a role in it. When it depends on who you ask and on what day. But I do agree that rates are the equivalent of gravitational force in finance. And interestingly enough, across the world, while central banks have sort of tried to help the local economies by taking the rates down and or working very actively to have some sort of inflation, it's actually deflation that we are all experiencing. So my hope, and I have very little hope, on this, but my hope is central banks will realize that what they have been up to has not worked and that they need to jack up the rates. And that can actually have a meaningful impact on what we do for a living, which is investing. So that's my hope. But the probability of that happening is de minimis at this point.
Very good. Christian?
When I think about my hopes, I have to center it on myself, because when I stick out my head and I read the newspaper or anything else, I just lose my mind. So I'm trying to focus on myself. And what I'm hopeful about is I feel like I've been able to grow as a person this year and maybe put into place some things that I feel good about. And so I'm looking forward to doing the things that I'm making myself do in this ever-changing environment. So whatever 2021 brings, I feel like I am better able to deal with it as a result of this year. And so I'm hopeful for just like, bring it and let's see what we can do. Yeah.
I like that. All right. Well, with that, where can everybody go and find more information about you? Christian, I'll come right back to you, and then we'll go counterclockwise again.
Sure. I'm on Twitter, Christian Ryther, Ryther. Also the website, Curreen Capital, Curreen capital.com. Yeah, you can read my letters there. Q4 should be good.
Very cool. Steven?
Yeah, well, I'd be remiss if I didn't congratulate Christian here while we have the opportunity on his new daughter. It's incredible, and best wishes here. I'm sure you'll an experience with your second child. I'm sure you've already gone through with your first year, but a nice way to continue to self-improve and joyous occasion, of course, and especially here into the holidays for the first time with the second child. You can find me at Steven_Kiel on Twitter, Arquitos.com, ARQUITOS, for my fund, and willowoakfunds.com, which is the Willow Oak Asset Management Network.
Very cool. And Shree?
Sure. Congratulations, Christian. Have a fantastic Thanksgiving as well. And both Bobby and Steve, fantastic Thanksgiving as well for you. Yeah, people can find me on Twitter at SVN Capital, and my website, svncapital.com. Write to Jessica at Willow Oak to get my letters, but generally available on both email and through Twitter.
Very cool. Well, yeah. And Christian, I like to echo the same sentiments, congratulations on the birth of your second daughter. As a fellow having a newborn this year, it's quite a year to have a newborn, so it's one of those things that I've been having to wrap my brain around of, like, everyone says 2020 is the worst year, and it's like, it's hard. It's like it's hard, it's just, again, that's why I continue to remind myself of how thankful and grateful I am for anything, and for all of what life throws at you. So, congrats again. Happy Thanksgiving. Thank you. And happy Thanksgiving to all of you. Thank you so much for joining me today. I hope you get, the biggest leg of the turkey. Well, sorry, Shree, I hope you get the biggest leg of the tofurkey. And guys, really, to everyone listening in, of course, or watching, happy Thanksgiving. I'm wishing you all a very bountiful and safe Thanksgiving this year. Yeah, with that, thank you all for joining me today. Again, my name is Robert Kraft. Follow me on Twitter at Bobby K. Kraft, BOBBYKKRAFT. You can listen to every episode of the Investors Roundtable on our YouTube channel, youtube.com/SNN Wire. And Yeah. Have a great weekend. Have a great holiday. Talk to y'all soon.
Thank you.
Thanks, guys.